Thank you everyone for being here. I'm Lori Collins. I'm a strategic advisor for GARI. And welcome to the GARI Working Group Speaker Series. This is our, I think the fourth event that we've had in this series. So for those of you who are from learning more about GARI, GARI stands for the Global Adaptation Resilience Investment Working Group. Is a private sector, private investor-led initiative with a mission to catalyze investment in resilience, particularly through the private sector, attracting private sector funds. GARI was announced at the Paris COP21 to bring together public and private sector actors, as we have here today. And GARI is an official partner of the UN Secretary General's Climate Resilience Initiative. GARI is focused on education, expanding our reach, and driving innovation in the financial sector for climate resilience. So today's event really is right on strategy for us. It advances all of these objectives. And we appreciate the contributions of all the panelists. Big thank you to Andrew Isle. We've known Andrew as a partner in GARI for many years. And we really appreciate the initiative here that GARI has taken, that Andrew has taken the lead on this. So Andrew is moderating our panel discussion today. Andrew is a climate risk and resilience investment professional. As a consultant, he is currently head of climate risk for North America for Tata Consultancy Services, which is a global IT solutions and advisory firm. He is a climate policy and market specialist with experience spanning diplomacy, development finance, and consulting. And he supports these engagements with financial institutions to address climate-related risks, challenges, and opportunities. He's worked on this since 2016, I believe is when we met. But I want to give Andrew more credit than just being the moderator. He came up with this entire topic. He has put together the notes for it, and he has pulled together this panel today. So big shout out and thank you to Andrew, and I will turn it over to you.
Thank you, Lori. Well, it takes a village, and we've gotten a huge amount of help from the whole GARI team, and we've got a terrific group of panelists today. So a lot of credit to go around. So thank you so much for that introduction, and let's set the stage for today's conversation. In recent years, there has been an explosion of new climate data types and sources, and they are available both publicly and privately from purveyors of proprietary data and analytic solutions. And these data types and sources are extremely broad and diverse, and they emerge from many technologies, all of which have a lot of possible exciting use cases for investors in adaptation and resilience. So let me walk very briefly through some of these types of technologies, where we stand, and what this means for the adaptation and resilience community. So I characterized these climate data and analytics types of information into groups of technologies. We have Earth observation from drone and robot enabled, both in situ and remote sensing. We've got satellite observation and Internet of Things. So on the observation side, there have been tremendous strides. There are analytical tools, a second group, such as models, projection tools, databases, and calculators for measuring and quantifying risk exposure, greenhouse gas emissions, environmental performance, exposure to hazards, and financial and economic impact, among other indicators. And then there's a third category of AI and machine learning enabled processors for quantitative data, for natural language. And these can automate and accelerate analytics, risk monitoring, corporate performance, regulatory compliance in the service of improving and streamlining many critical services and functions in many, many different kinds of organizations. So you take all these together and you have a data and analytics revolution that is creating unprecedented capabilities for supporting climate smart business decision-making and capital allocation in support of climate adaptation and resilience. Additionally, the purveyors of public and private data and analytical solutions are rapidly making these solutions accessible beyond the ranks of academic researchers and top-tier investment firms, who are among the early developers and adopters. However, it remains something of a Wild West environment where a dizzying array of tools and data streams can be difficult for consumers to find, assess, differentiate, and then choose amongst. And that is assuming that consumers know what they want and need. In many cases, data and analytics domains are so new and unfamiliar that potential users are unaware of the potential use cases and benefits. In this context, it's worth examining more closely how climate data can inform, improve, and increase investment in climate resilience. Today's event will start by briefly scanning the landscape of these climate data tools and then exploring use cases and future potential for adaptation and resilience investors, developers, and policymakers, amongst other potential users, to really leverage these new possibilities in data and analytics. So in terms of our panel discussion today, we'll start with an overview of or an introduction to the world of climate data. And we have set up the discussion so that the panelists can comment on the need for broader access to and utilization of climate data. And that is often derived from these new technologies, and how that's being deployed for these most important social objectives. And then we'll pivot to opportunities that are available for consumers of this data, particularly adaptation and resilience investors, to utilize these new data and analytics tools. And then we will try to cover, if time allows, the broader evolution of the resilience investment and asset management space, and really get into how this is being applied in practice. So without any further ado, let me briefly introduce our panelists. We're joined by Truman Semans, the founder and CEO of OS Climate, Abhilasha Purwar, founder and CEO of Blue Sky Analytics, and Marina Severinovsky, head of sustainability in North America for Schroders. And a housekeeping note before we dive into the substance here. We'll start with introductory remarks from each of our panelists. We'll have a facilitated panel discussion, and then we'll open it up to questions from the audience, which can be submitted via chat, and we'll share those with our panelists before we wrap up. And so please do take advantage of that opportunity, submit those questions whenever they arise, and also to note that we are recording today's session and hope to make the recording available shortly thereafter. So let's dive into our panel. To introduce Truman, Truman Semans is Chief Executive of OS Climate, a breakthrough open source solution for climate smart investing. Using the proven Linux Foundation approach for community-driven projects to solve complex challenges, the nonprofit OS Climate data and modeling platform is providing access to enable investment decision makers to run scenario-based predictive analysis for accurately forecasting and pricing risk and opportunity related to physical climate impacts and economic transition. Responding to the universal call for more rigorous, transparent, and affordable corporate climate data, OS Climate's Data Commons will provide company metrics as a public good. Previously, Truman was CEO of Element Capital Advisors, helping family offices and foundations integrate ESG into their portfolios. He was a partner of strategy at Consultancy Green Order, helping clients including private equity firms, Morgan Stanley, Google, GM, GE, Duke Energy, and others drive growth and profitability through investment in environmental innovation, resource efficiency, and clean technology. Truman led the Pew Business Environment Leadership Council and co-founded the U.S. Climate Action Partnership and U.S. Partnership for Renewable Energy Finance. He consulted with McKinsey, served as a U.S. Treasury Department international economist, and was the financial mechanisms lead on the U.S. climate change negotiating team. He has an MBA and BA from Duke University and a master's from Johns Hopkins SAIS. So Truman, so glad that you were joining us today, and you really are a pioneer in the space. Could you lay out for us what OS Climate is and what problems it is seeking to address? You're on mute, Truman.
Thanks so much, Andrew and Laurie. We really appreciate being included here today. So actually, Andrew, in your intro, you covered some of what we're all about, but I'll elaborate a bit on that. So we're organized with a mission to develop data and analytics, open data and open source analytic tools for scaling up and speeding development of what's needed for greater capital flowing into transition, mitigation, and resilience. So we're building end-to-end software tools and the supporting data infrastructure that is needed for that, and to enable better measurement and management of physical climate risk. And we'll get into more of that later in the program. Our tooling is supported by a data commons, which is the backbone of what we're doing. And it's basically federating data from a whole range of sources for climate related decision making and sourced from around the globe. And our members comprise a broad range of players, major players in financial institutions, financial data and service providers, technology firms, and basically coming together to form a world-class ecosystem for jointly and collaboratively developing solutions in the space, and supported by the Linux Foundation. And so for those not familiar with it, the Linux Foundation's the leading convener of open source development projects globally, with more than 300 projects over the last 20 years, more than 1,200 contributing organizations, and more than 540,000 individual contributors that are putting in code in these solutions across these projects. So it basically functions, the Linux Foundation and OS Climate function as co-ops, as a co-op where users and providers of data and technology working together with partners, including in academia, jointly, they put in IP, they put in technical people, and jointly build the solutions that they need, and do this in a completely transparent governance. Every bit of meeting notes, every decision taken, every process is completely open and is meritocratically democratic. And it's also supported by the Linux Foundation's sophisticated tools for legal expertise and collaboration systems. So hopefully that answers the question.
Absolutely. And could you tell us a little bit more about OS Climate in particular, and its mission, and how it goes about really sourcing this content to enable the users to derive benefit? Can you elaborate on that a bit?
Sure, and I think the best way of doing that is to jump to the physical risk and resilience tool and describe, sort of answer some of what you've raised in the context of that tool. So I think it's going to be helpful to show some slides to illustrate this. So let me pull those up now. Okay, can you all see my slides? Yes?
Yes,
Excellent.
we can see him.
So, so this is the physical risk and resilience tool project is one of the most important that's happening in the OS Climate umbrella project, and that's led by BNP Paribas, but with a number of other members, including London Stock Exchange Group, actively participating, and here, in terms of what the mission is, it really is expressed in the use cases that we are building tools to generate the actionable, decisionable data for. And so here in the case of the physical risk and resilience tool, it's about enhancing knowledge within the organizations, but specifically around portfolio risk measurement and scenario analysis, managing operational risk, also for origination of loans and investments, and for making of both voluntary and compliance disclosures. It's also important to note that there is that we are moving toward informing resilience and adaptation measurement and finance, and there's a potential to leverage the tools that we're building, not just for these use cases of banks and investment institutions and regulators, but also public interest through use by economic development agencies, national governments, communities, etc. So I'm going to move to the next slide. So here's a look at the sandbox part of what we're developing, so, for example, the interface shows that we connect data with a portfolio of assets and collect those to climate hazard models. And in this case, we can visualize the portfolio, visualize the modeling outputs, and then drill down into each of the assets to view specific climate impacts. And all this data can be exported to other models. So, a key point of this is that it's an end-to-end solution going from a range of data sources to output of a range of refined data based on the models. This kind of explains the process behind what you have just seen on the previous slides. We take a modular plug and play approach to risk measurement, where we start with climate models that generate hazard data. Then these link to asset location to the climate model in order to determine exposures. Once we know an asset is at risk, we then link that to a vulnerability model to determine the impact. So, for example, some power plants are going to have more downtime during a severe drought than IT software firms or a warehouse. So vulnerabilities of specific types of assets is really key. And then finally, the distribution of vulnerability risk can be used to then make an assessment on the level of risk within. So, for example, a bank may interpret the vulnerability risk into an economic impact and on the probability of default or loan pricing or in potential market price movement of an asset. Again, it's important to note that these building blocks appear really in the pre-competitive space, and that'll be a theme I'll come back to. So what the community is building are the layers of technology and of the data stack, where there's a business case for a wide range of private sector players to collaborate in those building blocks to avoid reinventing the wheel, to take advantage of the force multiplier of having many organizations working on the same problem, and to learn from world-class organizations that are participating in the projects. And then on top of that, to build proprietary and commercial tools. So BNP Paribas takes this pre-competitive layer that the community is developing and further elaborates that on proprietary tools for use by their credit analysts and other actors within the bank. I can tell you more about this tool if that's going to be helpful, and some of the data needs that we have and how we're addressing those, if you'd like.
Yeah, let's take another couple of minutes to talk a little bit more. You started to really answer the question about the users, the use case, and their motivations. I have two quick questions for you that would be great for this initial part of the presentation. First of all, who supports OS Climate and why? And then maybe we can end with what you were just mentioning around the data, which I think will be a great segue for Abhilasha.
Okay, great. I'm going to jump ahead to a slide that'll show you some of the key organizations involved. Again, OS Climate is a community of users and providers and partners that are jointly collaborating to develop the solutions that they need for climate-aligned finance and investing. and actually this is going to extend over the starting this year into the corporate sector, real economy corporates, for the models and tools that they need as well. But you see here, great institutions like BNP Paribas, Goldman, Allianz, and others that are collaborating with our data partners. Some of those are indicated in the bottom here, and also with the academic institutions that are developing models that are being incorporated into the platform. Public sector institutions as well. For example, we're in the process of developing a partnership with NOAA in that regard. And one of the key things is that the solutions are based on, and what's being built is based on the applied current pressing needs of the organizations that you see here on the user side, and informed by the understanding of how to solve those of great organizations on the provider side, such as S&P Global and London Stock Exchange Group. And then methodologically employing the very best scholarship through our collaboration, research and scholarship with collaboration with organizations like WRI, Rocky Mountain Institute. So does that answer your first question well, Andrew?
Absolutely. Yeah, no, that was great. And I think really adds a lot of color to who's part of this collaborative and what they're bringing to the table and what they're getting out of it. Really powerful. So yeah, I think, Truman, if you could speak very quickly, a couple of those entities on that slide you just mentioned are themselves data and analytics providers. Could you talk about where OS Climate is sourcing the raw data building blocks that feed this process?
Yes, so we source from a wide range of both public, open, and proprietary sources, and the data commons and data architecture that I think we're going to discuss a little bit later on in the program is specifically designed to be able to source and ingest and allow the management of data from a wide range of sources. And, we often get the question, how can, we handle and deal with proprietary and commercial or proprietary data? One of the key features there is allowing, for example, a corporation that's disclosing asset level data or climate, its climate performance metrics, to be able to permission the data that they expose into the platform for use only by making some of it public for public disclosures that they need to make, but permissioning some only for access, for example, by its lenders or regulators or their audit firms, and providing world-class security so that can't be breached and by actors that they don't want involved. So it'll be an evergreen and ever ongoing process to source data from a range of these different sources. But for example, the NOAA collaboration, we intend and have had conversations with the UK Met Office and have people in the community that are deeply connected there. Range of different universities. But then also one of the things that's important to note is commercial providers are collaborators as well. And there are instances where commercial providers like Jupiter Intelligence have open sourced essentially sort of a part of what their commercial product is. So in the case of Jupiter, a lower resolution data set for a number of, but not all the hazards that they cover, but meeting our requirement that any contribution like that is fully sufficient to meet some use cases, so that we're not a shop window, if you get my meaning. That said, we also are developing, and I'll mention this later on, much addressing some of the points in your opening, the ability to find the data, and then the APIs to be able to easily access it. So democratization and discovery is a key part of what we're doing.
Amazing. Well, Truman, thank you for connecting those dots for us. And I think that's a terrific segue to our next panelist, Abhilasha Purwar. So let me jump to you. Abhilasha, or Abby for short, is the founder and CEO of Blue Sky Analytics, a climate tech startup using satellite data and AI to build environmental monitoring and climate risk assessment products. She's a Fulbright scholar, Yale and IIT alumna, with over 8 years of work experience in private equity, big data analytics, product development, and environmental policy. She began her career as a research associate at JPAL, working on air pollution regulation with the Ministry of Environment in India. After her master's in environmental management from Yale, she went on to work for building flexible solar cells in Dublin, kickstarting solar projects and asset financing startup at PEG Africa, and was involved in clean energy investing as an associate at Golden Set Capital. Upon her return to India, Abby founded Blue Sky Analytics in 2018, as she believes that data has the capacity to change an entire ecosystem. She deems Blue Sky as a focal point for enabling global climate action with high quality, accessible environmental data. And Blue Sky has already achieved a lot of marvelous milestones of success, which I hope, Abby, you'll share with us a little bit. And tell us a bit about Blue Sky Analytics and what data you're using and how you're making that available to clients to solve their climate and environment challenges.
Thank you so much, Andrew, for such an amazing introduction. And thanks everybody for having me on this panel, and especially for all the attendees to give time to listen to our pretty complicated and boring-ish descriptions, but I would try to make it a little more interesting. So what we do at Blue Sky Analytics is really look at a lot of satellite data on the planet. So very much in the Earth observation, IoT, and AI space that Andrew mentioned about at the beginning of this conversation, to be able to essentially monitor the planet at a higher resolution. And I'll share my screen in a bit to kind of cover it. But the goal that we had, and it's very complementary to the work that Truman is doing. So it was amazing hearing your journey and amazing stuff that you guys are doing at OS Climate. What we decided was there are so many climate models that people are building, climate risk and climate estimations and insurances, and there's carbon credits. But what is actually happening to the planet? How much deforestation is happening in a particular forest? How much reforestation is happening through a carbon project? How is the water quality in a particular lake or river? How is the drought or flood affecting the water levels in a certain area? What about pollution is coming from the stacks of coal power plants? So really quantifying, and you can never quantify with 100% accuracy. Even your weighing scale has a margin of error. So building out really high quality models and kind of constantly updating these models. So, we've been on this journey for 5 years, and we have processed terabytes and terabytes of satellite data from public data sources from NASA and European Space Agency and Indian Space Research Organization, and also private data, which gives us sometimes really high quality data at 5-meter resolution. So you can pretty much count every different tree. And also we work a lot with ground data on matters so that we can calibrate and essentially really build out these models for just the different kinds of actors. 3 categories where we've seen a lot of client traction and a lot of utility of all of our services has been one in carbon markets, which has exploded in the last couple of years, as all of you know, and about 60% of carbon markets is nature-based solutions. So I think that's where MRV has been quite a big challenge. A lot of carbon markets is in the OTC format. And I think this is where I'll just sort of start sharing in the background. Hope you guys can see my screen. So this is our platform and product, which is called Space-Time, because we were a very big fan of Einstein's theory, but also because we are talking about environmental data in a spatiotemporal manner. So what you see here on the screen is a particular parcel of land in Amazon, and we are monitoring the canopy height. Now, what happens is when we have past data, we are yet to backfill this data. But when we have past data, we can sort of see if this patch here has gone through a deforestation. And I'll show 2 images of one of the latest client we've got from Indonesia. So this is that same parcel of land in 2015. And this is that same parcel of land in 2022. So this is the most successful reforestation conservation effort that I have come across. And now for them to be able to communicate it to their stakeholders, to be able to, let's say, monetize this in carbon markets, or essentially go to their investors and expand their efforts in global places, they need to be able to communicate properly. And a lot of this communication was not done through satellite-based measurements. I'll also cover one amazing part, which is this is the global wildfires that we monitored and measured and captured for 27th March, a couple of days ago, all across the world. And you can kind of keep on zooming in and in on different places and see what the trends are. These trends are 3 years on this platform, but then go 10 years in our database. And then we are also building predictive models. So this is the predictions we are doing for 2nd April, which is about 130,000 global forest and farm fires across the world, and really constantly checking how our measurements are tracking. So when we talk about climate risk, there are a lot of 30-year models, a lot of 10-year, 20-year models, but we're focusing now on 7 days and 10 days and 30 days and like 1 year, kind of like more shorter time series. And also like seeing like bringing more high resolution data, historical data, to update many of the existing 30-year, 10-year climate models. My favorite work that we do is in the water category. This is Lake McClure in California, and you can see very visibly how much the water levels have sort of changed over in the particular like one lake in span of 2 years from 2020 to 2022. When we take all the water bodies in California, all the lakes and rivers, we get the water stress numbers for the state of California, drought or flood, all of those events. From this drought in California, I'll go to a lake in Pakistan. And as we know, Pakistan had one of the most apocalyptic floods in, sort of like a 100-year history of flood. A particular lake called Manchar Lake, which has typically been oscillating at 200 kilometers square of area for past 2 years, went 8 times bigger to about 1.6 thousand, 1,600 square kilometer, inundating an airport, a couple of cities, a lot of farmland, a lot of villages. So by layering all this data and, very like sort of, I think great minds think alike. So similar to OS Climate, we built everything in an API format so that this data can be accessible to anybody. So it's a very plug and play model. You pick whatever information you need, and kind of like, again, similar to what, Truman mentioned about high resolution data versus low resolution data. We really believe and want space-time to be something like, where a general person, a lay person can come and be like, I want to know what is the water quality in the lake near me. So this is a particular lake in a city called Pune in India. So, somebody's like, oh, I want to know if I can go and swim in it, or I want to have like more activism, see where is this pollution coming from. So it's a lot of low resolution data available for people at large, openly and freely. But then with high resolution data, we monetize and build a sustainable income source, because I think sustainability is very like the core of our organization and core of our mission. So we want to be able to do impact, but also have a sustainable revenue stream so that we can constantly do innovation, constantly update AI models and consume more and more satellite data. I would stop here and pause and pass it on back to Andrew and the audience for more questions.
Thank you so much, Abby. Well, clearly you are processing data and focusing on an extremely wide range of different types of Earth observations and analytical metrics. And there's an extreme amount of flexibility, right, that the users can apply in extracting the data that they need, whether it's real-time observations, whether it's predictive. Can you talk a little bit about the types of clients you have? And this, I think, also can also help us pivot to Marina, who's been waiting in the wings here. Who are your clients? I mean, you don't have to name them by names, but can you give us some categories and where you see the biggest traction coming on the revenue side?
Definitely. I would say we have sort of thought of Blue Sky in a three-pronged strategy, which is like short-term, medium-term, long-term. And we are barely like sort of 4-year-old startup in our 5th year of existence right now. So, we have to focus on one is like smaller, quicker clients. So like, clients like a lot of nonprofits and foundations and many carbon developers who can come and say like, I am doing a conservation project on this lake. Can you help me with building trust with my stakeholders? Can you monitor this for me? Can you show this on spacetime and send me this data so that I can demonstrate my performance to everybody involved? And by satellite based observation, this is all AI algorithm maths based. Like we do nothing. Like once our algorithms are deployed, we communicate our methodology, transparency, accuracy, error rate to everybody, but then it's quite like objective and consistent truth across. So I think the carbon developers and the nonprofits, like sort of water conservation, those organizations have been very fast adopters. And the biggest part for them is this pain that they've faced. In carbon markets, a project of a very similar kind of conservation reforestation project in US, Europe, Africa, India, Indonesia could get very different price on the market. Somebody might be selling their carbon credits for $70 and the other party might be selling for $7 for pretty much exactly the same effort. So that mispricing. And the other aspect of carbon markets is like everything is OTC transaction right now. And we have to, there's a very high demand for carbon credits. So this will have to move to a more like exchange-based or market-based transaction where you would need a like data pipeline to kind of support. And I think what's happened with Vera, Gold Standard, and the previous MRV methods is one, they're obviously under a lot of like dispute, but also the waiting time and the cost. There's a waiting time of 2 years for many amazing conservation organizations that I know in India to go and get their carbon credit certified, which sort of like really brings the whole carbon financing and sustainable financing a big pickup. So that's one category. The second category, my favorite, but a very slow moving category, and we've talked about it a lot, is like climate risk. So I think, Truman's here who's been working on climate risk for many years, and like, we are doing our part. But like when we are talking, and I mean, I'm pretty sure Marina is going to add from Schroders' point of view, but if you're talking about 30-year predictions and for the loan sector, for a bank to take their real estate loan portfolio and do climate VAR calculations and climate stress testing, this is not going to happen overnight. These are very important calculations, which the banks, asset managers, insurers will have to do. And I'm sure we'll start to do it in like a couple of years, so 2-3 years, it will become mainstream. But right now we're at that inflection point where the banks themselves are hiring the first set of team to be able to undertake these kinds of efforts. So I think we are building those products, and we are alongside, we have like multiple BFSI partners who we constantly talk to and actually have been instrumental in informing them on the latest stage of innovation. So that's been a really great part where even for regulators like RBI, we have in the Indian Reserve Bank, we have been able to inform like, oh my God, look at all this innovation that's in the climate space. So this data that if you go through ECB's report, EIB's European Investment Bank's report, Bank of England's report, even SEC, everybody has data need or data gap mentioned at least like 10 times in each of the reports. So I think to some level, we are going to the regulators and saying like, hey, I know you're mentioning those data gaps, but here we are, young engineers and data scientists working really hard to actually solve for that data gap need. And I think last but not the least is that asset monitoring. As we go in the 30-year horizon and climate change starts to become more inevitable for our critical infrastructure, ports, dams, roads, power infrastructure, we will have to be much more proactive in our sort of climate resiliency, climate planning. Right now, all of it is a little back foot. Very few electric utilities in the world are like, subscribing or taking active wildfire data and like sort of like, cutting their power infrastructure or managing or doing the vegetation management in accordance to those kinds of risks. So there will be a huge movement. It's not happening today. It will take time. But I think on the asset monitoring side, I would say in 10 years, every critical asset would have a climate intelligence attached to it. So I think that's going to be my long short on that. Yeah.
Thank you, Abhi. That was a fantastic answer and very comprehensive. I think, a lot to unpack there that I look forward to coming back to the Q&A. But that really, tease Marina up very well. So let me turn the floor over to her after a brief introduction. So Marina Severinovsky is the head of sustainability in North America for Schroders. She leads the sustainability and ESG integration for Schroders Investments. She collaborates with senior managers on market strategy, client communications, product development, sales, and investor management. In 2022, the Schroders sustainability team published a plan for nature, which sets out a firm-wide ambition to harness the power of investment to accelerate a nature-positive future, and outlines the firm's approach, progress to date, and future priorities across 3 key areas: insights, influence, and innovation. Marina previously was the investment director for North America for quantitative equity products, an investment strategist, and an alternatives specialist at Schroders and an investment banker at Citi. She holds an MBA in finance from Columbia Business School and a BA in economics from Columbia. Marina, so thank you so much for joining us. And I think it's so critical that we have a user and consumer really leveraging these new capabilities on this panel. Could you tell us a bit about what Schroders is, what it does, and how it is assessing and integrating ESG and other environmental and climate considerations into its investment process?
Thank you so much, Andrew. And can I give Abby like a props for the word evitable, which I thought was an awesome, we always say things are inevitable, but I love evitable. And I looked it up, like can be avoided, prevented, like climate risk, evitable. I love it. I'm going to use it a lot. I'm gonna give you credit every time. Hopefully you guys can see my slides. Thank you. Yeah. So yeah, let me just kind of set this up in terms of our use cases and kind of what we're doing so far. So Schroders is a nearly $900 billion asset manager based in the UK, but really globally. And we manage mostly institutional money, although retail money as well, around the world in every asset class imaginable. I myself worked in commodities and emerging market debt over the years here at Schroders, and as was mentioned, quantitative equities. So really across the piece, across both public and private assets, which creates just obviously a lot of kind of work around the houses. And we are a fully ESG sort of integrated shop as well. It's something we've committed to for over 20 years. As Andrew mentioned, there's a couple of big sort of commitments that we've made. We have dozens of investment teams, each of them running money in their own asset classes and their own styles. And again, we have to create some kind of commonality for them in terms of resourcing and also kind of objectives. So the 3 things that are kind of on this page that you'll see is one of them was already mentioned, the plan for nature, but I'm going to start with climate transition. We are stewards of enormous amounts of capital. We, as an organization, are also committed to net zero, but our operations are 6,000 times smaller than our financed assets. And so if we're going to make a dent in climate transition, we're going to do that through our investee companies. And so it's really critical that we are responsible in that regard. And so we've set a climate transition action plan, again, for ourselves, but also in that kind of our scope 3, effectively our sort of investee companies. We have a science-based target that's been validated, and we have a multi-year plan pathway going forward on how we're going to achieve this. The kind of the end result, right, is that because we're not going to divest left and right, we run very diversified portfolios for clients. We need to encourage companies to evolve, right? So it's really around engagement for us. And you can't engage well if you don't have good information. You have to come to the table with good insights as a real partner to companies. So that's step 1. Not really separate, but really related, and it's something that's kind of grown out of the kind of climate effort is, well, where's the solution to this problem? And it is around nature and investment in nature. Again, we talked about we can't really divest of everything or very much. We have to engage, but then we also have to look for climate positive solutions. So as Andrew kind of talked about, the other commitment we've made is around nature, and it's around sort of helping companies that we invest in identify their risks and dependencies around nature, and then again, really be able to engage in a knowledgeable and constructive way with them on how they're going to deal with those risks and those dependencies. And then how do we pivot client capital towards opportunities to invest in climate positive solutions. Again, we're not an NGO, so it's not like you got to do this because it's going to help the world. We're doing this because it's great for clients. It's going to be a diversifier. It's going to give them a different source of returns. It's inflation protection, whatever it is, right? You can see sort of the, sustainable forestry, for example, conservation, et cetera. So that's the kind of trick we have to play, because at the end of the day, our clients want the best returns possible. And as a fiduciary, that's what we're required to do. And so how do we then figure out, again, the information that we need to have to build this investment case for clients? And then the last piece is the blueprint around engagement. So everything I've sort of said on climate and nature is really engagement based, but we have a broader effort around engaging with companies also around things like their human capital, around human rights. We actually just have a report out today on renewable energy and indigenous rights, because these things are really very connected. You can't sort of separate the social or the human away from the environmental. And so in order to be able, again, to engage really effectively and constructively, this is use case one, right? Needing to have this information. I mean, really use case one is investing, right? Again, kind of with more knowledge, but then it's that engagement piece as well. So those are the kind of big things. This, again, is a really busy slide, but this is sort of, again, what we do. We have at the center our investors. There are dozens of different teams, and the things that we provide to them, which is, thematic research, like I just mentioned, the piece that we've done, that active ownership or engagement support, training, analysis, et cetera. But the two big areas that I highlighted here, one of them is integration. It's what we require of all of our investors, which is that they pass an annual accreditation that they can validate, to anybody, an external party too, regulator, for example, they are really taking ESG risk into account, including climate risk very specifically in their portfolios, in every kind of portfolio, whether it's a real estate portfolio, public equities portfolio. And then we provide tools to the investors that they can use to assess their portfolios. And we also can use those tools to diagnose client portfolios. So I'll show you those as well. So this is the accreditation. Every year, every investment team at Schroders has to pass this process. And you can see there's an explicit what is required. One of those things is you articulate kind of how you take these things into account, explicit risk assessment, and very much sort of baked into this is climate risk. The tools that we provide that are fed obviously by data take a number of different forms. Again, this is a busy slide. Anybody who wants the slides after, I'm happy to provide. We ran them through compliance and everything. So there's investment analysis along the lines of stakeholder analysis, and also along the lines of something that we kind of proprietary tool that we created that is fed by a lot of data, which is around basically externality measurement, right? What is the social good or social ill that a company does with its operations? A lot of times the social ill that companies do sort of to society and to environment, they're not paying for yet, right? But over time, they will pay for them more and more. And so we're trying to predict in a way, if we're long-term investors, which we are, if we're invested in a company that's creating sort of hazards or like I said, negative externalities to people and planet, at some point via regulation, additional kind of legislation, costs, carbon prices, those things will come back to the balance sheet. And we need to understand how the business will be impacted from a profitability standpoint when that eventuality, that inevitable situation occurs, right? So that's one. And then thematic alignment, we have a lot of clients obviously who are interested in investing along sort of different SDGs, right? Making an impact in different areas. So that's another kind of lens that we can look on portfolios. Impact measurement, so by this I mean true impact investing, capital I impact, requires even more sort of information, because you really are looking for measurable outcomes and you need to be able to evidence them. And then finally, like in a category not by itself, but just we wanted to sort of set it aside, is the climate change piece, where we're looking in particular in our portfolios at a temperature rating model, because we ourselves have, again, our sort of commitment that we've made, and we're using a temperature alignment pathway. So we need to be able to understand that for all the underlying companies as well. So that's kind of the nature of the data that we're using. And this, again, very quickly, is just the portfolio diagnostics for clients. So it's all well and good that we can do this ourselves, but one of the big things that we can offer, especially to our kind of our richest relationships, our very kind of close partners who are massive asset owners, sovereigns, et cetera, is we can help them look at their own portfolios through these lenses. They can understand where their risks lie. So again, we've got internal sort of customers, right, which is our investment teams, and then we've got external sort of clients, which are indeed our clients. So what is it that we do in all of this? we have built a data science effort, and I'm not sure how we could have without it, because obviously the translation mechanism between all these sort of fancy data, right, that Truman and Abby have discussed, and our investors, who are oftentimes lay people, right, they went to business school, they know how to look at a financial statement. That kind of translation mechanism requires some expertise as data gets sort of more rich and more complex. So we look at, again, kind of non-traditional data, and you can see that here, kind of we identify what does that mean outside of just market data and company accounts. You know, it's industry data, it's geospatial data, it's web scrape data, and then it's all the data that's being discussed, you know, kind of today on the panel. And so the insights team, you know, is again our proprietary team of over 20 people at Schroders since 2014, has kind of grown up alongside our sustainability business, actually, really using an alternative data for investment desks. They're really helping create the use cases. It's sort of both ways. Sometimes the investors, the PMs and the analysts will say, I wish I could understand XYZ. And the data scientists will say, oh, okay, let me find the right data set for you. Or else they're kind of scouting the world for great data sets, and they're thinking about some of our PMs and analysts, like, you know, this would be really interesting to this team, right? They would really want to understand this. So they're doing that, and that kind of translation in both directions, and trying to enable better investment decisions for, you know, for our clients. This is the trifecta. We kind of put all this together. There's one sole purpose here, which is generating alpha for clients, and everything else is in service of that. So it's our investors and how they obviously can kind of generate ideas for their portfolios, how they manage those portfolios. It's the insights that we provide, again, with the sort of the data science, and then my side, of course, which is sort of around sustainability. When you bring those things together, that is how we believe we can create more alpha. We're in a competitive world. We are all active ownership too. So everybody comes in every day thinking about how to beat the benchmark, how to deliver alpha to clients. So these kinds of tools give us an edge. I would say kind of final place here, and then I have some examples, but I'll let that be kind of Q&A piece, is, you know, where does this sort of all happen, right? So it's around single security analysis leading to better security selection, and it's also around kind of portfolio construction. And then, as I mentioned, it's around active ownership. Once we own the stock or the bond or the other asset, you know, how we can be a knowledgeable asset owner and engage with you know, with companies around kind of the transitions that are happening in the world and how that's going to impact their businesses and what they're doing to prepare for those things. I think I'm going to stop there. And then, as I said, I did have some examples of some of the data that we're using.
Well, Marina, when you shared your slides with me in advance, you told me you were going to manage to squeeze it into 10 minutes. And I don't know if I completely believed you, but that was pretty extraordinary. So hats off.
I'm a New Yorker. We talk fast. Yeah.
Not only did you talk fast, that was an impressive array of methodologies and processes and tools and teams. I mean, you really have this incredibly well-oiled machine that you're using. One immediate follow-up that comes to mind for me, and I do want to see some of those examples, but just if you could speak broadly to how you believe that bringing to bear all of this data and methods and analytics has fundamentally changed the investments that Schroders makes. And obviously you have the ability now to tell a story, to have much greater insight on the existing portfolio. What do you think is different today, right, since 2014, as opposed to, say, a business as usual counterfactual, right, where this group didn't exist, right? And how has that actually affected the portfolio and potentially outcomes?
So one place is kind of looking for pitfalls and controversies. So that's been a very big, and this was a big use case kind of early on, is, you know, how do we, the world, there is so much more information in the world that people who are doing things wrong can get caught out very easily. I was trying to explain this to a family member recently, very kind of layman's terms, right? And I said, you know, like years and years ago, you could hire underage kids to work in a factory somewhere in the third world and nobody would know. And today everybody has an iPhone. Like, look, you're holding your iPhone right now. And so you just take a video, upload it on, you know, wherever. And immediately that reputational risk is sort of live and present. And I think the same thing, obviously, for kind of environmental. Are you degrading, you know, kind of your, like the natural resources in your kind of community, you know, kind of along your supply chain, for example, you know, you're liable for those things. So I think that was one kind of early place that we were sort of looking for controversy and kind of offsetting that as a risk to ourselves and our clients. I mean, that's one. I think, what has changed, it's an evolution. It's a constant evolution. I think active managers have always looked for, like, where can I find additional information so I can make better decisions, so I can, again, have an edge against my peers, my competitors, so I can better service clients. So the smart investors took this on right away. When we started building this team, and then when we started kind of really building out our sustainability infrastructure, which that was about 20 years ago, not everybody's a believer. Some people drag their feet, right? And they just want to do the traditional analysis they're accustomed to doing. You have to prove the value to them, right? You have to show that it has, like, we were able to do better. And so there were teams that were used as sort of case studies, once they fully integrated sustainability, once they became really active consumers of our data science group, did they find that they were producing better alpha? Were they avoiding risks? Were they delivering better returns? Was the engagement more constructive? Did that deliver returns? It's really hard to do that on an organizational level, but individual team by team, our quant equities team, which was my home for a while, and then our emerging markets team in particular, emerging market equities team, was a great place to see this live. Investing in EM already brings a lot of potential risks, and so they were very keen, very eager to sort of take this on board. And so we continue to do that kind of analysis. So I think now these are kind of baked in as sort of tools for all of our investors to take on. I think the next phase, right, is what I talked about in terms of, okay, we have this plan for nature. We want to understand the risks and dependencies because as a fiduciary, we have to. We want to engage well with the companies. But the next question is, can we find the real alpha opportunity in solving some of these problems that this data helps us assess and analyze and identify? And that, I think, is where the big change has been for the industry, frankly, and certainly for us, is kind of looking for the opportunity within the, like the transition. In the US especially, I think this is relevant for me because I think a lot of US consumers, you guys would probably be quite aware of this, there's some backlash against ESG, there's some disparate views around ESG. And so when you come from the perspective of kind of climate risk and, transition and even sort of climate change, right, you don't always get alignment. When you come from the perspective of, hey, let's find opportunities to make money by, being on the right side of massive global trends like decarbonization, deglobalization, what does that sort of do? I think, you can capture a lot more interest around investors who, on a moral or values basis may not necessarily be aligned with you. So we really have to do that. That's kind of existential for us. And so that, I think, has been a big change too, is, on some level, we do believe that it's sort of a responsibility for us to be able to pivot money in these directions. But again, it has to start with an investment case, and clients have to understand that our first interest is kind of what is going to be the best outcome for them from a returns and risk standpoint. And so if you can build a better case using data, a lot of times it is longer term data, but if you can build a kind of a case using that longer term data, and then on an ongoing basis, you can say, as we manage your portfolio, we have access to all of this information in an ongoing way so we can avoid pitfalls, really identify the winners, who's kind of getting those opportunities. I think that again is a different kind of conversation with our clients, and probably, I think, also previews another question you were going to ask about how our clients see this, right?
Absolutely. Yeah. And I think that is quite a powerful repartee to anyone who would claim that ESG is only about values, right? I think that it's quite clear that, insights are business relevant, right? And they can be used to avoid risks. They can be used to improve decision making, and they can be used to drive returns, right? And to make money. And so I think that the deeper one digs into all the hard work that's going into this, the clearer it becomes that you have a lot of secret weapons and tactics, right?
Yeah.
that give you a lot of edge. I think I am going to call a little bit of an audible in terms of our agenda and scramble our order to go through some of the examples, because I think, Marina, while we have you here already sharing your screen, I would love to immediately go right back to you for the examples that you wanted to raise. And I think hopefully that will improve our flow and let us get a little bit to the Q&A at the end. So I know you had a few examples that you wanted to share, and whether it's on the client side or specific case studies, let her rip. Show us what you'd like to share. And I think, this is all the detail around the application and the use cases is just so enlightening and so rich for our audience.
Good. Yeah, I mean, like I said, this is quick and easy, and anybody who wants the slides can take a look at them later on. Here's our energy task force, and this is around kind of the EU 27. You can see here demand destruction being tracked. So this is just gas storage, and we look at obviously kind of weather and kind of good discipline on kind of gas consumption. Where is the EU kind of gas storage is at? And so again, this is our insights unit and our investors trying to use this sort of non-traditional data on the current energy crisis. So obviously very relevant from kind of early last year after Russia invaded the Ukraine. This is an interesting one. So Muse is a proprietary tool that we built that covers all individual counties in the US. We have a sister tool that covers school districts. It's really intense. And it looks at really kind of granular data within each municipality on sort of social things like obesity and gun deaths and all these sorts of things, but it also looks at environmental, right? So it looks at flooding, looks at forest fire, all of those sorts of environmental things. And so we really, when we're talking about munis investing, really being able to see very granularly, again, the kind of physical risks of climate change, for example, alongside some of the social risks in a municipality is really, really important. This one is an interesting one. This was natural language processing around smart cities, and basically going through data online, news data, and looking at articles and kind of clustering semantic content in order to find individual companies to invest in that are providing things like intelligent street lighting, kind of again renewable, right, resourcing, all sorts of interesting kind of smart cities technology. So again, this was a way to again look for potential investment candidates for our investors. And then we have, kind of again, generating that information edge that I talked about, looking at data outside of the traditional market. So, wind farm data, the Global Forest Watch data, NASA power data. I have a couple of examples here, I think, in terms of here, this is the kind of Global Forest Watch. I mean, obviously, from a cost perspective, we're always looking for what is available open source, what we can find, and then we kind of fill that in with specialist data that we know we do pay for. And so you can see kind of logging, canopy loss, carbon sequestration, biodiversity tracking. And I think I had maybe one more here, right? NASA has a really rich set of data as well around radiation, obviously kind of social, right? Economic deprivation, et cetera. So looking for that open source data, again, we actually have somebody on the team who's just a data scout. So it's a full-time position scouting new data, both kind of public and private sources. I mean, I do have one. I mean, it's just an individual company example, which is Korea Zinc, which again, I kind of won't go into, but there was an entire sort of business case that we built around this company. And obviously we had to take into account the kind of ESG characteristics. It's a very power intensive business, sort of zinc smelting. It utilizes coal very heavily, so you have to kind of understand those risk factors. There's the kind of, social on the social side, around kind of mining, are they responsible with what they do? So again, really assessing any individual position that we take, and this obviously is an emerging markets example, as I mentioned, is a really rich area to sort of see this. It's really critical that we be able to, again, understand in a really deep way, I mean, the risks and the opportunities for a company. And these guys actually stand out against their peers as sort of one of the best at managing all of these issues. And so if you're going to sort of invest with someone and then engage with someone, you want to pick sort of, the kind of best of the peer group. So I'll pause there. I'll stop sharing the slides. I know it's aggressive that I had them on the screen for so long.
No, you did
Yeah.
fantastic. I was hanging on every slide and every word. Speaking of words, I'm adding to our list of words of the day. Data scout is my new favorite job. So, and I love that term. So we'll add that to Evitable for our highlights. Thank you so much for that. I think that really propels us to sort of our next deep dive. Truman, I'd love to turn back to you to share the more specifics around the data commons, which I know you teed up in your initial remarks. So I'd love to give you back the floor to tell us a little bit more about the data commons in the context of the physical climate project.
Great, we'll do, Andrew, and and I'll touch on the data scout aspect a bit. That is really a crucial thing. It's an example of the kind of a function in the sustainable finance community where there's a strong argument for doing it cooperatively, because everybody does. I mean, there's some value to having an in-house data scout, but oftentimes sharing that work, because everybody really needs to scout a lot of the same kinds of information. So that's a bit how we function. And so I'll just say a little bit about the technology that that underlies it and how it functions. And then some of the areas where there's a real business case for various data sources to participate in building out the data commons. So I'm going to share my screen, put some slides back on here. Great. Can you see my slides here? Super. Yep. So, you know, at the sort of at the foundation of what we're doing in OS Climate is the data commons, what we call the data commons, and it really functions as a data mesh that, as I mentioned, sources from both public and proprietary sources, and it feeds data into our tools, but also is soon going to be available to serve the data needs of the broader sustainable finance community. The development's being led by Red Hat, which is the world's largest open source software company, and you know that has technology that's underlying vast parts of the financial system, and then also by our head of AI and corporate development, Brendan Riley. Three of the main characteristics are that it's a self-service data infrastructure, so that our partners and collaborators will increasingly be able to use the functionality in there, both on the back end and the front end. Also, decentralized data product management, and what that really means is that, for example, a corporate disclosing into the platform will have a data asset, a data product that it owns and can control, and that its assurance providers can work with. And then federated governance from a data governance standpoint. One of the key things to note is this is all being built, has been built to date for climate-specific data for finance and investing, but the structures and the functionality, the data management, everything is as well suited for biodiversity-related information, nature-based capital, and broader ESG. So, you know, down the line, we expect that that the infrastructure that we're creating will be used for those broader purposes, and very much biodi and nature-based solutions in the nearer term. We're in the process also of developing a data exchange, which is basically all about the UI to make it much easier for discovery of data and for access to data. And so that's something that we have that we'll be building out, we hope, as finalists in two of the key data utility initiatives that are underway, probably well known to most of the viewers here. One is the data utility that's being built by the global banking community, or is anticipated by the Global Financial Markets Association, and then the data utility that's contemplated by the Climate Data Steering Committee, and under the Net Zero Data Public Utility. But also this would be built out for regulators in several countries that are exploring how the data commons in this infrastructure can be used for banking and regulatory needs. And then I wanted to, let's see here, I also wanted to just briefly talk then about some of the, this kind of gets back to, where there are potential opportunities for, for-profit and, a range of different firms in the financial services industries to collaborate around data needs. So one thing is from the, we function really as a bridge between public sector, NGO, academic sources, and the financial community, providing really a channel and a way for them to make the data and the models for refined data generation actually actionable, having impact. So that's one thing. The second, though, is, as mentioned, the potential to share the work on data scouting, for example. And so this slide gives just an indication of some of the areas where there are data needs where, from either of these standpoints. Oh, by the way, a lot of the sort of initial population of the data commons came from a group called data services within Allianz that serves Allianz Asset Management, Allianz Global Investors, where there are a range of different data sets that they were curating and managing, but where there's a community where all the community needs a lot of those same data sets, and where so that there was a business case for contributing and managing them within the community. Other areas, though, that are crucial are around hazard exposure data, and so this is let's right now making a call out to those that are watching here to reach out to us if you have data sets in this area where we can provide a bridge. For example, if you're coming from the public sector, one of the things that's important that happens in the context of the physical risk and resilience tool is oftentimes that upstream data, and I'm sure Marina, your data organization does this, is the data is not ready for action and not appropriate for a range of different kinds of analysis. Either it needs to be downscaled or normalized or various types of things, but also optimized, because you got to be able to run analysis on in some cases millions, portfolio with millions of holdings, and you got to be able to do that at speed. So we're eager for any viewer that is a potential contributor to reach out to us, and later on we'll put up a QR code that you can use to do that.
Thank you, Truman. A lot here to delve into. I actually want to jump straight to one of the questions from the Q&A, which I think is directly linking to part of the slide you were just showing. And I think, when calculating the damage function, right, for a particular asset, or translating a physical climate hazard into a financial metric, really having a well-defined and robust methodology for assessing the exposure and the vulnerability is critical. And one of our questions here, I'll read out, is can you explain more about what goes into the vulnerability model for an asset? We are aware of a lot of exposure-based risk assessments, but they don't account for an asset's resilience. And I think that really helps to bring the conversation back to the adaptation and resilience investment space, which is GARI's focus, and where perhaps we can kind of center our kind of final round here of questions and comments. So maybe I'll pitch that one to you first, Truman, though we can also open that one up to the floor.
Sure. Well, this may sound like a dodge, but part of the whole approach that we take is that, for one thing, models are about insights and not answers, and every model is partly right and partly wrong, or any good quality model, right? And so a big part of what we're doing in this federation is bringing together a range of different models so that you can look at hazards and vulnerability from different lenses. And another thing is we're our roadmap progresses toward localization. So in some cases, localization is super important there. I could talk about, but I don't think there's probably time here to talk about what we're, some work that we're undertaking in Nigeria around ag assets, but the same approach for localization can be proved out in other places. So I think that's part of the answer. Let me stop there to leave room for my co-panelists to answer that as well.
So Abby, I wanted to give you a chance both to share any deeper dive cases that you may have at your fingertips if you like, or to try to tackle that question, right? Because I know that you are both, your secret sauce includes both the sourcing of the data, of course, but also the processing, right? And you mentioned that one of the three core, or actually two of your core client groups, right? Both the financial sector and the real assets managers are critically concerned with this question, right, of what is the asset's vulnerability. And I'm wondering if you could tell us a little bit about how your products or either address that, or how you help clients answer that kind of question.
Definitely, Andrew. I think one of the first things to start with is that it's a very rapidly evolving sector and it's very new. What we're talking about is 10-year data innovations and 10-year models and calculations, while if you look into weather, which is also another sort of parallel data industry within like sort of climate and assets and financial sector, it's been around for 50 years and there's been a lot of research, and that's why now there are many referenceable, consistent data sources. So whether it's IBM or AccuWeather, they're like the gold standard. So that emergence of gold standard within the climate sectors, whether it's for climate risk, for climate models, wildfire risk, like vulnerability, all of those indexes are something that we will see happening in the next 10 years. And all of us present here and many of the other sort of companies like us or organizations like us in this ecosystem will play a very critical part into it. So I think that's like one of those like interesting moments of like 90s internet sort of, concoction. That's where we are in the terms of like climate analytics. So that's the first part. The second I would say is, where we really bring in is not just prediction, but history in real time. And because history in real time is something so like, you can check it. You can cross-check it with like, data and like reporting on the ground and everything. So what we're trying to break down is measurement of what's happening on the ground faster. So if there's a flooding event happen, then I want to provide the information to Schroders or any other asset manager like tomorrow rather than 6 months later, right? If there is going to be any flood like tomorrow, then I want to have like some sort of like estimate of it like 7 days prior. I mean, sometimes like, when we are talking about 30-year prediction, like long prediction series, I always feel like 7 and 10 days is the start. And then we build 30 years from that. So that's another part. I think the third thing is that asset managers simply were not seeing this kind of shift in their risk or this kind of like, calculation that this could be something which could be a topple down effect 5 years prior, and that's happening. So, what happened with credit risk in 2008, like nobody was thinking that credit risk estimations are going to bring the entire financial system on knees, like, and everybody like, oh, real estate prices always go high, people always pay their loans. So that's the same moment in climate risk where it's not just underestimation of risk, there's simply not a lot of estimation. So when more and more assets start to get like, affected, and more like, banks or insurers see that like, PG&E, I would say, was a classic example where they had to take much more proactive efforts of whether it's insurance or whether it is like, removing vegetation, more risk management efforts prior to the wildfires in California, which led to the bankruptcy. So those examples adding on, they will bring, and we have seen that with some clients, like especially I would mention a particular Mediterranean European country, which has now earmarked a huge budget for wildfire protection, is that not just real estate market, but general confidence of the public, tourism, municipal bonds, everything is getting affected by wildfires. In fact, in what we saw in Australia in 2019 was not just the Australian economy, but global commodities market had a topple down effect. Last year in China, with energy prices like really skyrocketing because there was not enough water in the rivers to be able to provide hydroelectricity, and there was like a 50% deficit. They had to start new coal power plants. So while we are all talking about ESG on one side and like really making climate efforts, a lot of our renewable assets are susceptible to that. A very, fun calculation we did, not fun, I would say sad calculation we did, was all the carbon credits effort that we've done in the last 10 years and the acceleration of wildfires that we're seeing globally. If we do net, are we actually taking carbon out of the atmosphere, or we are adding carbon into the atmosphere? So the 360 approach of simply monitoring and measuring prior to predictions really help us provide this like, good baseline to everybody for doing 30-year predictions. I think, those models will get incorporated in all the BFSI sector. But I think the real-time historical is also going to start getting adapted. And that will also lead to a lot of proactive decision-making, as Marina mentioned, that once you hold a bond, You want to be a more active asset manager. You want to be, once you hold a stock in a company which has let's say a high water exposure, they have like, the need, like silicon chip plant or something, they really need a lot of water. Or let's say you're into textile, which could be a big polluter. Now the asset managers are no longer like, I only care about what is the top revenue. There is a huge amount of like reputational risk if you are holding an asset which was very polluting in any third world country or first world country, any part of the world. And all of those things coming together will lead to high quality data development by multiple actors to start with, a lot of consolidation effort, like any in this industry that happens. I think a lot of M&As in the sector are absolutely inevitable, absolutely inevitable, and our favorite word of the day. So with that, probably by the end of decade, there'll be referenceable data sets. And many of them, currently I would say there is a margin of error is high. So if I'm doing a wildfire prediction and somebody else is doing, we might be like 10% off each other. But in the next 5 years timeframe, many of these data sets are going to come quite close to each other in terms of like, the error margins, the prediction rates and all. I hope I answered this question.
Thank you, Abby. And one of the things that I'd like to highlight that you really emphasized are the diverse transmission pathways for risk, right? That just doing an asset-based physical risk assessment is insufficient when you have these systemic pathways, right? Through global supply chains, through massive events, the scale of the California wildfires, or the China drought, or the Australia wildfires that you mentioned, right? And so I think your points are very well taken, that this is complicated. And I think in our last round of questions, I'd like to sort of amend this one question in the chat that I'm about to read, which is, has a single methodology for measuring physical climate risk and resilience been co-developed? I think Truman partially addressed that, saying that it's sort of about the collective approach. And I think clearly there is no single one methodology that captures everything. But I do think I'm interested in maybe this last lightning round of questions for each of the panelists. If you could draw a parallel between the work that you're doing and where you think there is now increasing traction for measuring this physical risk exposure, and then translating that into investments in adaptation and resilience. And maybe you can sort of give one last perspective on that question for each of the panelists, say 60 seconds each. And I realize I'm kind of springing that one on you all, but maybe Marina, I can go to you first, and then we'll come back through the order for the Q&A. Truman and then Abby.
But can you say it again? From an investor's perspective, sure. I'm trying to think about,
Right. So, thinking through all that you've presented, we have this audience here today that is adaptation and resilience investment oriented. And is there, some way, some sort of key point that you might extract about how these data analytics capabilities are helping to enable that kind of investment?
For sure. I mean, I think, again, I go back to the fact that this is an asset management business, and then I'm responsible for the kind of US, or it's really the Americas, but let's say the US part of the asset management business. So it has to come down to me, to something kind of hard and fiduciary focused. So our physical risk, our tool, we have a proprietary tool internally, is around insurance cost. Right? Because you have to make it manifest for people. So why do we care about physical risk to climate change? Because there's an insurance cost to the company, right? So like that's the translation mechanism, again, that I can sort of take back to the client and be like, this is not all like pie in the sky, or we want to make sure that we prevent forest fires, which we do. But the point is that we are investing in companies, and if their facilities, right, their business is subject to these risks, that there's going to be a higher cost over time to insure against that, that risk, and that will impact their bottom line. And so as we think about kind of the financials of that business, and we assess the profitability of that business, these are things that we need to understand. So that ultimately is what it comes down to. Anything that gives me the ability to make an investment oriented case, right, about how to distinguish, right, what we can sort of see for companies in the future. And a lot of it is very predictive, as we sort of talked about, because the job of an investor is not to wait for the rest to materialize and then to, oh, how do I deal with this, right? It's very much to kind of think ahead. So anything that allows me to do that in a kind of a hard numbers way, again, this sort of negative externalities, future costs, we call them pre-financial costs, right? Something that will manifest over time, that is really, really helpful.
Thank you, Marina. Terrific
Thank you.
answer. So Truman, over to you. What's the link to adaptation and resilience investment?
Sure. Well, so one of the key things at first is because it is the dawn of the internet, equivalent, as Abby had said, and there's a lot of methodology that needs to quickly develop. We need to accelerate all that, and one of the key things is to be able to actually look at methodology in practice, go from words to math to code, be able to run and look at, and that's necessary for convergence. So in terms of though how this is being done in practice, is so for I mentioned BNP Paribas is leading our physical risk and resilience tool. The reason why they are is because, among other things, they've got a massive global real estate portfolio with millions of loans, and they need to be able to look at various actors for risk management, for credit analysis, need to be able to understand the exposure and the vulnerability across that portfolio. And the other members are eager for that to be extended to other use cases as well. I'd mentioned one other kind of applied use of projects that we're doing in OS climate, and that is one is a sovereigns data set that looks at risk across sovereigns. It's a project that is being developed in collaboration with PCAF, the Partnership for Carbon Accounting Financials, which, as you know, involves a very large and growing swath of the financial sector.
Great. Thank you for that, Truman. And I think that really drives it home for the the lenders out there, right? And clearly real estate and real assets are really where a lot of this risk is manifest for asset holders. So thank you for sharing.
But there is a lot of exposure in sovereigns as well. I mean,
right.
I mean, this is at that level.
Absolutely. That is a tricky topic, one that we'll have to save, I think, for another session. So Abby, you've kind of already answered this question, but if you'd like a quick last word, I'm happy to give it to you before we close.
Yeah, no, I think I'll add something I had a presentation with BlackRock on asset management and climate risk, in which we spent 10 minutes with the audience just saying what is an asset? What is it that you consider an asset? And the definition really varies widely from my home to all the bonds that I have to all the stocks I have. And it's a very personal as well as organizational definition. And a lot of our capital allocation, where I will put my money tomorrow, really depends on how I view these assets. And I think today, for instance, my mom and everybody's let's put money in gold because what is happening in the stock market. So those investment and risk are two things which go hand in hand. So where there's climate risk is perceived to be high, investment is going to be automatically low. And that is how I think the market will automatically adjust and lead to a more resilient and adapted sort of world if we are able to do those kinds of measurements properly. If you're not able to do that, then we will have with the lack of information and lack of proactive decision making, you would do investments in places where climate risk is very high, and those investments will turn out to be bad. So we will have stranded asset, and we would have that sort of negative impact onto the economy if that's not balanced out. So just sort of finalizing, I would say climate action and climate risk are two things which are really together. And that's where the global financial sector has that not just fiduciary duty, but an environmental duty, sort of adding on to Marina's point, because every dollar that is invested into something would lead to an outcome in terms of carbon dioxide number, but also every dollar invested into something else would lead to an impact in terms of either carbon sequestered or climate resiliency. And probably all of us together with our numbers, our models, our client relations can really facilitate all of the sector. I hope that was a nice summary. Thanks.
Fantastic, Abby. I couldn't have said it better, so I won't even try. And Laurie, we almost ended on time, but just in wrapping up and handing it back to you, I wanted to thank our panelists again, Truman, Abby, and Marina, for an absolutely fantastic and rich discussion with many, many great illustrations of how data and analytics are changing how we think about climate risk and that capital allocation you were speaking to, Abby. So thank you again, and back to you, Laurie.
Yeah, this was great. Thank you so much. I took tons of notes. I'm not sure if I'll be able to put all this summarized in a blog post, but really terrific panel. I think this brought a lot of insight, and thank you again so much. A big thanks to Andrew for pulling this panel together, and we will get a recording of this. I will email it out to the folks who registered for this event, and it will also be on the GARI website under convenings. So we thank you very much. If you have any questions for GARI, you can direct them to me. I'm Lori Collins. My email is lcollins@garigroup.com. So thanks again, and we will look forward to the next one.